To join our analyst, Viv Govender of Lehumo Capital. Thanks very much for joining us, sir. Markets appear to be in positive territory today. So what's driving sentiment, do you think?
I think those numbers we got yesterday from the U.S. housing sector does seem to indicate that the U.S. economy is reasonably strong, and that's giving us a bit of confidence if the Fed decides to basically hike rates in the near term. I think, if you had to look at the rate hike possibility, one of the silver linings behind it is the fact that it does indicate a stronger economy. And if the U.S. economy is stronger, it's going to have a positive effect throughout the globe. It's going to drive demand for Chinese goods, help that economy out, drive demand, therefore, for commodities, etc., help the entire globe out. So if you do see a strong U.S. economy able to easily handle a rate hike, it is positive, not just for the U.S., but for the global equity market as well.
That seems to be rising to uncomfortable levels for net importers of oil like South Africa. With volatile and mostly weak rand, and high oil prices, surely that means more intense inflation for the local economy.
Well, yes, most certainly. Considering just how weak the currency is and the fact that the oil price has recovered significantly. If you look at it where it was just a few months ago, we were looking at numbers below $30 a barrel. Now, as it's close to $50 a barrel, it is a significant increase. We're talking in excess of two-thirds. But if you had to look at the historic averages in terms of what the oil prices have been over the last few years, you would see that we experienced a number of years where oil prices were significantly above $100 a barrel. So even though in the short term we have seen oil prices rebound, they're still well below historical average. But that being said, when oil was above 100, the rand was significantly stronger. And I think we have to basically in South Africa do something about the weakness around our currency, which I think is the real weakness that's driving things. Yes, the oil price has recovered, but like I said, it's not anywhere near what the historical average has been for the medium term. And if we had to look at where we are going forward, what the real weaknesses and what the real risks for the economy are, I think it's more likely to come from the currency. The oil price, to a certain extent, at the moment is being affected by a number of short-term factors, including things like the wildfires in Canada, as well as disruptions in Nigeria.
Next week, or tomorrow next week, is D-Day in terms of Standard & Poor's making a decision on our credit rating. To what extent do you think that the market has factored in a credit downgrade or not?
I don't think it's been factored in fully at the moment. I do think that there's a chance, that we could get out of it without a downgrade, and so the market doesn't want to act before it's known. When something like this does occur, when we do have a downgrade, there has a lot of implications that happen, not just in terms of people's sentiment changing, but sometimes in case of rules-based investment. Several investment organizations out there have certain rules around the kind of investments they can do in the bond sector, whether or not they can have own a certain country's bond, and how much of it they can actually own. And that's often determined by whether or not they're investment grade or not. So being non-investment grade would actually have a huge impact, not just in terms of people's sentiment changing and saying they don't like South Africa anymore, but often they'd be forced buying by some large institutional investors.
Now, let's look at some stocks. The MTN one in particular, they've announced today that their financial performance is likely to be hit quite hard, given that the two biggest markets that they serve, Nigeria and South Africa, are taking strain. What do you think about that statement?
I think that's most certainly true. If you had to look at just the impact of Nigeria, the weakness that they had due to that issue of the fine, it had a huge impact on the company. But even beyond that, the Nigerian economy at the moment is basically in quite a bad state. Conversely, South Africa, they are exporters of oil. So the weaker the oil price, the weaker that economy is. And in the first quarter, that economy shrunk by just under 0.5%. In South Africa, we all know that our economy is barely growing. If we are growing at all, it's well below 1%. And both those factors are negative for consumers and therefore negative for MTN. But that being said, I do think that MTN is focusing a great deal now on trying to build up its infrastructure. Despite the fact that we are seeing weaker revenue and weaker demand coming through, a company like MTN cannot afford not to pump money into the infrastructure, because that's what the real growth for the future is going to come from. I do think that if you look at the telecom sector locally and in Africa, a number of important changes are happening, especially with regards to things like over-the-top services, WhatsApp calling, etc. It's going to be really disruptive for the industry going forward.
I saw just before we came on air that the Nigerian central bank has decided to no longer peg the naira against the dollar. It's going to let it, be freely trade against other currencies. Is that a positive thing for them to do for their economy?
It's something they had to do. It's virtually impossible to make your currency stronger than it is without extremely stringent exchange controls and other restrictive practices which really harm your economy. I mean, even an economy as large as the UK wasn't able to maintain its peg. We look back in the early 1990s when George Soros had that day we made $1 billion. He basically took down the Bank of England, and that was one of the largest central banks in the world being taken down by bond vigilantes. Nigeria is only able to maintain its currency peg due to rather restrictive economic practices in terms of what can be exported, or what can be imported, how much money can leave the country, etc., which has very negative impacts on its economy overall. I think by freeing up this one restriction, it actually makes a huge difference in terms of the ability of Nigerians to conduct business more efficiently.
And then just the last stock to look at, Taste Holdings. They've gone on a big foray with American companies, Domino's Pizzas, and also lately Starbucks. But they haven't really done so well on the profit front. Why so?
Yeah, look, I mean, if you're going to go in this expansionary attitude and try and actually build up a base, a new kind of which was product in South Africa like Starbucks, or even have a new rebranding effectively of one of their pizza operations with the Domino's. I think when it comes to these kind of things, you have to basically put money down in order to grow awareness, to grow a culture of coffee buying, a culture of Domino's pizza buying, in order to actually get future returns. So when initially you bring a new brand into a country, you have to spend a lot of money to get it up there, get it up and running, to make sure that every new store you have is top notch, etc., in order to build that brand awareness and that brand loyalty as well. So if you are going to be doing this here, it takes a lot of time and takes a lot of money as well. And it has to be expected that if a company is going to try and bring in these large brands into the country and trying to make them dominant or at least well-known, like McDonald's and KFC are also imported brands, it is a lot of money down up front, hopefully to bear fruits going forward.
All right, Viv, thank you so much for your insights. That was Viv Govender, of Lehumo Capital. After the break, more business news for you.